Tariffs, inflation and monetary policy. What are the key things you need to know? Stay tuned to find out more. Stock markets were positive yesterday, with strength coming from a broad range of areas. In the UK, we saw the large cap index reach a new all-time high. Within the US, some of the strongest performing areas were steel and aluminium producers, and this follows the announcement over the weekend of Trump's plans to implement a 25% tariff on the import of steel and aluminium goods into the US. This is set now to take place from the 4th of March. If we look at some of the individual businesses within those sectors, examples include Cleveland-Cliffs, where we saw the share price jump 18% on the day following the announcement. We also saw a recovery in the number of the tech names within the US as well. In the UK, BP was one of the largest contributors to the positive share price returns which we saw for the UK market. And this followed the announcement that a US activist hedge fund had taken a large stake in BP as a business. And they have a number of plans to refine the strategic direction of the business to unlock some of the value which they see within there. Following this announcement, BP share prices jumped 8.2% on the day. UK, US and European bond markets were relatively well behaved, not much movement in the yield across the day. We're going to get an update on inflation in the US. This will tell us where we've been. But yesterday we also had an update on consumer expectations 12 months, 3 years and 5 years down the line. If we look at the 12-month expectation, pretty consistent with the December read. Consumers expecting inflation to be around 3% 12 months from now. There are, however, a number of components of the inflation basket which have an impact on consumers' spending ability, which are running above the long-term average. Just to take a couple of examples, food inflation is expected to be running at 4.6%, medical care 6.8% and rent around 6%. So these are areas which are in focus for the consumers. If we look 3 and 5 years out from now, expecting inflation to be in around that 3% range. So not seeing a massive pickup in terms of long-term inflation expectations, but they are still running ahead of the central bank's 2% target. This is going to be really interesting because this week we also have the semi-annual testimony on monetary policy, which is where Jerome Powell, who's a chairman of the Federal Reserve, is going to be questioned by Democrats and Republicans around the success of policy, but also the intentions as he looks ahead. This is coming at quite a challenging point when you've got Trump imposing large-scale tariffs, protectionism measures which are set to be inflationary to the consumer, increasing the cost of imports into the US. So a lot going on, but generally a good day for the markets yesterday. Thank you for watching.
This video is not a recommendation or personal financial advice. With investing, your capital is at risk. Investments can fluctuate in value and you may get back less than you invest.